welcome everybody. I've got a special guest today, Rodrigo. He's going to introduce himself, so I'm not going to spend all that time doing that. He can do it. But my name's Darren Wright, your real estate investor. So Rodrigo, can you just tell us who you are, where you're from, and what do you do?
Okay, thank you, Darren. So first off, my name is Rodrigo Parada. I live in Laval, Quebec. I'm a real estate investor that invests in multifamily assets across our country and also in the United States. I recently co-founded a mutual fund trust, and we have completed 2 projects already with the trust. So in a nutshell, that's pretty much what I do, Darren.
Yeah, that's great. So I read in your bio that you have over $15 million in assets. So the question I have for you, were you born into money?
No, I wasn't. So I come from an immigrant background. My mom is from El Salvador. My dad is from Chile. They both left their countries in the 70s, and they actually met in Montreal. So when they got here, typical immigrant upbringing, my mom went and had a bit of a university background. My dad started working my grandfather's business. And they did what they could for the majority of their lives. We grew up, not necessarily poor, I wouldn't say that, but middle class, lower middle class. And that's basically the upbringing. And I think it brought me a lot more value than potentially somebody that came up with the resources that I didn't have. I was exposed to a different way of life.
Yeah, absolutely. Yeah. I totally agree with you there on the fact that, you get a good work ethic. So you learn that you have to work for something in order to get it. You're not just giving it to you. And that's why I asked that. I mean, it's a broad question to ask. Did you come into money? Because most people assume if you're buying multifamily properties, then, oh, you must have been born into money. You've been given it and things like that. So it's great to hear on. You came like most of us. We don't born with money. We've got to work for all this. So how did you get started in real estate investing?
Okay, so the first thing I would say is I was fortunate enough that one of my aunts introduced me to Rich Dad Poor Dad in my early 20s. So I read that book, kind of got the gist of it, but didn't do anything in real estate until later on, a couple of years later, around my beginning of my 30s. When I made my first acquisition, I bought a townhouse with my wife, and that's when I got started in real estate. At the same time, I did some real estate appraisal on the residential side. So I got exposed to that side of the business, basically the valuation, but also meeting people that were doing this for a quote unquote living, the investing part. And then what ended up happening is around 2015, 2016, I started listening to the Bigger Pocket podcast, which was about American, real estate investing, and just got that that bug, that itch that I needed to do something, and then reverted back to what I had read in Rich Dad Poor Dad, what I had done in real estate appraisal, and I basically started working on my first JV, which was my family. So with my 2 brothers, my dad and my wife, we bought a fourplex in 2018 that we still have. And that was the beginning of the journey. We started buying multifamily assets, smaller multifamily assets in the Quebec area and around the Montreal area, sorry. And up until, let's call it mid 2020, end of 2020, when where a lot of us as investors get when we're on the residential side is our debt to income ratio was capped out. So we had to look at commercial financing, commercial mortgages, and that's when, everything really started expanding and scaling up because it's a whole different game, whole different set of rules. And that led me to invest outside of Quebec. So we passively invested in some deals in Northern Ontario, around Thunder Bay. And then we made our way into Alberta, where we're now focused on most of our acquisitions.
Okay, great. So I just run back to that. You said your first one you did with a JV and your family was a JV, because a lot of people, they get a little bit stuck on where do you find investors? And I always tell them, well, you get your phone out, you got your friends, your family, and you do your A list. So what was, I mean, and then I also get told people that, well, families don't trust me what I'm doing because it's my first one. So how did you approach your family to all join together and start this journey?
So that's a very interesting question, Darren, because it's something that I hear a lot. And also, that was my initial challenge. Um, and it evolved from being a challenge to more of a realization as I started realizing this thing here that I'm going to share with you. The initial challenge of working with family is not necessarily about the knowledge or the numbers or the rationale that you're bringing into the business, right? It has more to do about the image that they have of you. Because at that moment in our lives, I was either the bigger brother or the son of someone. And even though what I was sharing was making sense, what I was fighting against was the image that they had of me rather than the actual numbers. So once we realize that, then we start actually catering our actions to basically deal with that. And for me, what it was is taking the time to explain, to expose them to the same thing that I was exposed to, just for them to validate what I was sharing. And at the same time, when we were doing our first acquisitions, we were doing our walkthroughs, our due diligence period, all of that stuff. Well, they needed to partake in the conversations with the different stakeholders so that indirectly there was a validation of what I was sharing with them. So that was the way that I approached it. And it's still an ongoing process. I'm not saying that everything is perfect all the time. It is family after all. But understanding what you're actually dealing with is a big solution or a big factor to getting it resolved, I would say.
Yeah, great. So you had to coach them, that you had to teach them what you know so they could understand the modeler and understand that you know what you know.
That's a fair point. I guess to a certain extent, I did have to do that, but that's making me realize that you truly understand something the moment that you're able to explain it and teach it to someone.
Yeah,
So I guess I got to a point that I was fairly comfortable with what I was doing, that I was able to do that, right? So very good point.
yeah. Great. So did you have any coaching in how to buy properties or multifamily, or did you learn mainly from experience?
So the residential portion of my quote unquote career was self-taught. So listening to podcasts, reading some books, and I was fortunate enough to be in a market cycle around 2018 in the Greater Montreal area that you could still find some properties that could cash flow at a fair price. It's not what we're seeing right now. So were some of my mistakes kind of camouflaged by that potentially, but to this day, it's still an appreciating asset with a healthy cash flow. Where I must say that I started seeking coaching was the moment that we transitioned into more of the commercial side, because I realized quite early on that I was stepping into a different world that required a different approach to it. It's not the same type of mortgage broker, realtor, seller. So um, I had the foresight, if I could put it that way, that I should pay for coaching. I should look for some sort of mentorship so that I could bridge the gap between where I was and where I need to go. And yeah, that's what I did. I seeked it.
Smart decision, because you're absolutely right. It is different realtors, it is different mortgage brokers, lawyers as well. It's a different skill set for sure. So I also read in your bio that you do coaching yourself. So you're coaching students. You want to just tell us a little bit more about that and what you do there?
Yeah, so I'm currently coaching students on real estate acquisitions, mainly multifamily, through a program that's called Well Genius. It's Canadian, out of Ontario. So I have 20 somewhat students across the country, and I'm coaching them through basically either their first or later on acquisition of multifamily assets. And I like to focus more on, the underwriting, but also the mindset behind putting these deals together and getting to where you need to go as the deal maker.
Yeah, great. So I'm glad you touched on mindset there. So how has your mindset changed from reading that Rich Dad Poor Dad book to where you're at now?
Um, I would say that the mindset, okay, so that's a really interesting question. So a bit about my background and where I was influenced into who I am today.
Yeah,
So while I was in university, from 2006, call it, to 2011, took a bit of time in university. I was actually a professional poker player. I used to play poker online. That was my job during
yeah,
those years. And the
wow,
reason why I bring that up is those 5 years of doing that for a living basically enabled me to have my ego crushed on a daily basis because poker is it's a tough way to make an easy living, as a quote that's said in the environment. So um, in going back to the mindset, when you're constantly making the right decisions and you know you've made the right decision because they're supported by probabilities, but you still don't get the expected results, that forces you to have a different outlook on not just yourself, but life in general and business also, right? So my mindset nowadays is has been shaped by that period of hardship so that when I'm faced with situations now, I have an easier tendency to take a step back and look at the situation objectively rather than emotionally or subjectively. So it has evolved. It's still evolving. It's a life work, right? Like I'm still hot-blooded. I'm Latino, like I just said earlier. Like, so you're always fighting against that. But I just think that in the position that I am right now, with different partners and with the fiduciary duty that we have in our different corporations, you have to take that approach to business. If not, it's going to be way harder than it needs to be.
yeah, yeah, totally agree. You have to remove the emotion from the buying process for sure. You're buying on numbers. I call every building you buy is a business. It's a self-contained business that has income and has expense, and it has to make money. No ifs or buts. So yeah.
That's it.
So you said also in your bio that you're a husband and a father and you're building generational wealth. So I wanted to touch on that because you've already partnered with your family, but now you're building it for your family as well, or your share for your family as well. So what does that look like for the future? What's your mind on that? On is there a number of properties you want, or
Um, I think that's one of the trickiest question that always comes up in our business, Darren, because I'll actually give you a story to explain how I think. I used to run marathons. I used to do a lot of marathons, a lot of running. I really enjoyed the act of running. I enjoy running because it sucks. It's hard, it's difficult, you're out of breath, but you're still pushing yourself and you're still getting it done, and especially long distance running. The reason why I bring this up is when I first completed my first marathon, the Marathon of Montreal, I fell into a bit of a lull after completing my objective because I didn't know what I was running for anymore, right? I had achieved what I had worked for months and suffered, and I had finally completed it that I was at a loss because I guess that's how I'm geared. I don't know. So looking back on that situation and the amount of time that it took me to get out of that lull, that little slump, I've taken that approach with the real estate in terms of the business as a whole, and also from the generational wealth perspective. I don't have a specific number in mind because those numbers can be changed. I do have an idea of the type of life that I want to live, and also the opportunities that I want to give to my family and the people that I care about. And that basically means that my daughters, I want them to be brought up in the world where they have options, not like I did or my parents did, or even their grandparents, right? It's all about that. And I am fortunate enough to be in the position that I am right now, so that whatever I'm learning, I can share with the people around me because this is valuable knowledge, right? Like you could go and get an education on certain of these things, but kind of like what we were talking about earlier, we actually learn by doing most of the time. So this is one of them, right? So that's what I want to leave behind, if I could put it that way.
yeah, that's great. And I totally agree with you. I mean, I don't know if it's an entrepreneur thing as well. I was the same. I'm dyslexic. So one of my challenges, what I wanted to do when I got into computers was to get a Bachelor of Science degree. It was an absolute dream that no one could think I'm stupid anymore if I can put a Bachelor of Science initials after my name. And when I completed it didn't change me whatsoever because I didn't feel any different. And I thought I didn't need to prove to anybody that I was smart enough to do it. I just kind of proved it to myself. And I had a bit of a lull. I was like, well, what next?
Mhm.
So you're right. I set myself annual goals, and then we have an overall goal. And if you ever get there, you just got to keep up in the ante and just go again. It's always got to be something you're striving for to keep you driving for sure.
Yeah, 100%, Darren.
Yeah, totally agree with that. So what does a typical day look like for you then? Because a lot of people, they're listening like you and I used to listen to podcasts, and you always wonder what did he do all day from getting up to going to bed?
Yeah, okay, so a typical day would be, we wake up between, we'll call it 6 or 7, have our daily routine with the family. I really enjoy making my espresso in the morning. I have my little setup here, so that's my little ritual in the morning. Um, and then, bring the kids to school, probably go to the gym, and then get the day started. I'm also, since I'm in Quebec and I'm working mainly on deals in Alberta, there's always that 2 hour difference. So with my partners, because they also have families and they have to do the same thing that I'm doing, my day usually starts around, we call it between 10 or 11 Eastern, which is 8 or 9 for them. So from call it 11 to 4:30 Eastern, just working on deals, following up on the projects that we have, doing a bit of capital raising if we're raising for a certain project, and just keeping up with whatever is being thrown at us. I don't want to say that I'm putting out fires constantly because I'm not a firefighter, but you know how it is. You deal with the day as it comes to you, and then from call it 5 to 7:30 p.m. It's family time, preparing, dinner, doing homework. And then for the evening, depending on what happens, it's a bit of networking, either some coaching or still working. I love what I do. I'm fortunate enough to be doing what I'm doing right now. So I don't count my hours really. I just try to be present when I'm present at home and working as soon as I can.
Yeah, that's great. You're able to do what you're doing and still spend time with your family. And like you mentioned about money doesn't make you happy, but money gives you options, and the options are that you're spending time with family. That's the real goal for anybody. Money is never the goal; it's the freedom that's the goal for everyone. So it's great that you're doing that. And then, and you're right, we don't want to be putting out fires. So what we do when anything comes up, I'm always, well, how can we fix this so it doesn't happen again? What procedure do we need to put in place? Or we've just spent 5 minutes before this meeting talking about the type of toilet that we're going to put on as master list. Is it round? Is it oval? And I'm saying, check what's already there so we don't have a number of different seats, then the maintenance person can go and get a new one and it's going to match every time. And I said, the reason why we're discussing it, said, this is the only time we're discussing it, because once it's on the list, the model that we use, that's all you're going to get. And everything gets changed to that. So you're right. It's a lot of solving problems, and then everybody else can deal with it. You don't need to get involved again.
That's it.
Yeah. So how do you manage the properties that are remote then? A lot of people always wonder about that.
So there's no secret sauce to it. Like there's no secret formula. We hire property management companies, so we manage the managers. And anything that's long distance, like I said, I have partners in Alberta right now that if ever there's anything, if ever we do need to go on site, we have somebody, but most of the time it's delegated to somebody else that we pay accordingly. And that's the way that we operate, right? That's it.
You have to do. So the way to scale is to get people doing all the work. You can't do it yourself. Sure.
I personally don't think so, right? Because property management is only one aspect of multifamily acquisitions. So you could, vertically integrate that side of the business if you want to, but I don't think that that's what I'm I know that's not what I'm striving to do as a business. I'd rather delegate that until that we would need to incorporate into our business that aspect. But for now, it's working great. We love the people that we're working with, whether it's over there in Quebec, in Ontario. It's just finding the right people that you can work with and setting the right expectations.
Yeah, yeah, totally agree. So what advice would you give someone who's interested in getting started?
Before focusing on your top line, make sure that you have your expenses under control. There's I think that in today's age with social media, we get caught up in the make more money, make it money fast, so on and so forth, and have the curated type of life that you can post online. But it's actually the boring stuff that enables you to survive the different market cycles. And what I mean by boring stuff is having those expenses under control. So, as an example, one of the first things that we did, my family, so my wife and I, we sold our single family home 4 years ago, and we moved into a triplex to house hack. So we could, start saving a bit on those expenses while building wealth. So if you focus on that first, then after you could start being a bit more aggressive with some of your decisions because you've limited your financial risk, quote unquote. So I would focus on that first.
Yeah, yeah, I totally agree. I moved into, we're recently married a couple of years, and I sold my, acreage farm, acreage/farm, and we moved into a one bedroom house. Um, just so we could pull more money into the business, so we didn't need as many joint venture partners, that we could do more deals and sales by pumping that money in. Because, like you say, it is slow and it is boring. You've got to wait. You don't make a lot of money on the first year, but then you've got to keep going, and you can have a refinance or you can keep cash flow high, whichever your model is. But yeah, you're not going to get rich quick, that's for sure. You just got to keep going, and every year you have more customers because you have more tenants, you have more properties, and just keep going.
Yep, you gotta embrace delayed gratification, right?
Yeah, absolutely. Yeah. So if anyone wants to reach out and connect with you, what's the best way they can reach out and connect with you?
LinkedIn, Rodrigo Parada. You'll find me. You'll see this face. I can't really miss it. If not, any of the other socials out there under my name, Rodrigo Parada, Instagram, Facebook, but LinkedIn is the easiest. Also, a little tip for everyone if you're looking to get into the business world, focus on LinkedIn rather than any of the other platforms. It's where the money's at.
Yeah, absolutely. Do you have any more tips and advice for people that are watching, or stories before we go?
Um, I do have a story. Yeah, I could share my first my bigger deal that we did in Alberta. And what I want to share with people is just don't give up. You only lose when you stop, really. So we bought a 38 unit asset in Rocky Mountain House, Alberta, in November 2023. No, October 2023. Sorry. We bought it at 1.9 mil. So that's 50K per door. Great price.
Yeah,
The reason why it was so cheap is it had a 55% vacancy. Now you would think initially that, this is a rundown asset and it's in worse shape than what it really is, but after we did the walkthrough, we realized that the reason why it was so vacant is that nobody had a phone number to call to book actually a showing and rent. So, um, so we got it under contract. We renovated it, and we got our appraisal back after having completed all of the work and brought up the tenancy. So now we're fully booked. So we were currently appraised at $5.6 million a
yeah,
year after, and we're
yeah,
refinancing into MLI Select with a 95% loan to value mortgage, with level one affordability and level one energy efficiency. So the reason why I share this is not because of the numbers. I think the numbers are not a clear representation of what this deal means for my partners, myself, and our investors. It's just that when we first started, everybody told us that we were insane, didn't make any sense, nobody would do this deal. But we knew after having done our due diligence and having everything supported by the right reports, the right stakeholders, that there was a way ahead in getting this done. So if your fundamentals are sound, and you have a solid team behind you, everybody's always going to tell you that you're crazy, but you got to bet on yourself and you got to move forward. So stick to the fundamentals, have everything validated, look at everything from a perspective of probabilities and rather than certainties, and just move ahead if you feel that you've got a good enough percentage chance of winning. That's what I would say.
Yeah, well, that's a great story, and congratulations on that. That's one of the big wins for sure. And you're absolutely right about it's not just can you increase the value for, the renovations. It's like management. Is it being managed correctly? Is it something you can do? I mean, you and I both know because we're in this field, and maybe not everybody does, but the valuations, it doesn't care on the market. The valuation comes from the net operating income. So if you can get that income up and you can get those expenses down, then the difference is where you go. And I absolutely laugh when you go to these all the properties that someone's owned it for 20, 30 years and it's not being managed correctly. And the first one of the questions you always want to know, what are the rents? And then you ask them, what is the laundry? And they put that cash in their pocket. They do.
Yeah.
And they think they're winning because they're cheating the government out of, oh yeah, I'm taking $200 cash a week out of it or whatever it is. And I say, do you understand how much value you're losing from a property by not declaring the cash? So if you're taking cash out of a property, you're really hurting yourself, because declare it, let your accountants save you on the tax dollars, and you get the valuation, then you can refinance and pull that money out cash, or any other creative way your accountant can get that money. So yeah, you're really hurting yourself. If you think you're being smart than the government, then you're not.
No, that's it. And you're always gonna have to pay eventually, right? That's the thing. But you are so right, Darren. I feel that everybody's just in love with the acquisition. When you're looking at real estate, everybody's thinking of the buy, the actual transaction. But I find that currently in the market cycle that we're in, the people that actually shine are the operators, the people that go in, look at the top line, look at the expenses, understand how this all works and how they can optimize your NOI and get the project done ASAP. It's not sexy, it's not what you're going to see on social media, but it's what works.
Yeah.
And when you're in the business that we are, I personally don't care about the glitz and glamour. I don't care about the flashy stuff. I want to be able to sleep at night. I want to understand my risk and I want to know where I could put my effort to get the maximum bang for my buck. And that's exactly what you just described. You're right on, my friend.
Yeah, absolutely. And hopefully people watching this will get some great value for it. So I really appreciate you coming on. Appreciate your time. I know we've already been through, you've got a busy schedule like most people. So really appreciate that, and take care.
Thank you, Darren.